Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company that's hoping to zap its way to success, Tivic Health Systems. Get ready for a shock because their latest filing might leave you a little stunned, especially when it comes to turning potential into profit. But before we get to that, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat with other corporate decoding nerds. So Tivic Health Systems, what's their deal? They're trying to shake up the health world with bioelectronic devices, little gadgets that use electricity to treat things like sinus pain. Think of it like a TENS unit. But for your face, they also have a biologic program working on medications to help with radiation sickness and other serious stuff. It's a bit of a mix, devices and drugs, and that can make things interesting or complicated really fast. Let's see what their recent S1 filing, which is like a company introducing itself to the stock market all over again, tells us about where they're headed. First off, this Form S1 is a registration statement, kind of like filling out an application to sell more of their stock to investors. It means they're looking for more money to fuel their plans. In this case, a selling stockholder is offering shares, which basically means someone who already owns a big chunk of the company is looking to sell some of it to the public. Now, the main story here is a deal with a company called Mast Hill Fund. Think of Mast Hill as a financial backer. They've agreed to buy up to $25 million in Tivic's stock over time. This is through something called an equity purchase agreement, which is like a promise that Tivic can sell shares to Mast Hill when they need the cash. There are some catches, of course. Let's talk about some key risks associated with this offering. One big risk is that there's no guarantee how many shares Tivic will actually sell to Mast Hill. Maybe they'll sell all $25 million worth. Maybe they'll sell nothing. The amount depends on market conditions and Tivic's own decisions. It's not a sure thing. There's a limit on how many shares Tivic can issue to Mast Hill. This is called an exchange cap. It's there to prevent one entity from gaining too much control of the company, at least initially. If Tivic wants to sell more shares than the cap allows, they'll need to get stockholder approval. That adds another layer of uncertainty. Here's a potential headache for investors. Because Mast Hill can sell shares whenever they want, the price of the stock could fluctuate. This means people who buy shares at different times could end up paying different prices. Someone might buy high only to see the price drop later. If Mast Hill starts selling a lot of shares, it could flood the market and drive the price down. This is called dilution, and it basically means each existing share is worth less because there are more shares floating around. Tivic's management has a lot of freedom in how they use the money they get from selling shares to Mast Hill. They could invest it wisely, or they could make some bad calls. As an investor, you're trusting their judgment even though you might have different ideas. To raise more money down the road, Tivic might decide to sell even more shares. That would dilute the existing shares even further, potentially lowering the stock price. Now let's go over some key terms of the Mast Hill agreement. The company has the right, but not the obligation, to sell shares to Mast Hill. Think of it like a safety net, but not a mandatory one. The price Mast Hill pays for the shares isn't fixed. It's based on 95% of the lowest VWAP or volume weighted average price of Tivic stock over a period of 5 trading days after Tivic stock over the company is making the deal. As we talked about, there is an exchange cap. Tivic can't sell more than about 20% of its outstanding shares to Mast Hill unless they get stockholder approval. This is a standard protection to make sure one entity doesn't take over the company without a shareholder vote. As a sweetener for the deal, Tivic gave Mast Hill almost 30,000 shares of stock just for signing the agreement. It's like a commitment bonus. So who's this Mast Hill fund anyway? According to the filing, the business address of Mast Hill is in Massachusetts. Patrick Hasani, who's in Massachusetts, Patrick Hasani, who's the chief investment officer of Mast Hill, has voting control. Tivic is required to keep the SEC informed and updated about sales conducted by the selling stockholder. Looking at the experts involved, Rosenberg Rich Baker Berman is the independent accounting firm that audited Tivic's financial statements. It's worth noting their report includes a warning about Tivic's ability to continue as a going concern, meaning there's substantial doubt they can stay in business. That's a red flag you want to consider. Okay, to conclude, let's break down what this filing really means. On one hand, Tivic is bringing some novel ideas to the market with their bioelectronic devices, but they're clearly still in a very risky position financially. This deal with Mast Hill gives them some financial flexibility, but it's not a guaranteed solution. Given the uncertainty about future sales and the existing doubts about Tivic's ability to continue as a going concern, it's very hard to put a price on Tivic's stock. It all boils down to whether they can turn those ideas into real revenue, and that's a big question mark. Alright, that's our breakdown of Tivic Health Systems' latest filing. What's your take on their chances of success? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the corporate world. Don't forget to check out the Discord in the description, and see you next time.